Hello, traders. This is a full week, and I'm going to go over some things this week. As far as economic data goes, we got retail sales Wednesday. Wednesday, the FOMC has a press conference, so that's going to be on the radar. And then Thursday, we have housing starts data, jobless claims, and the Philly manufacturing survey. And then Friday, we have the Michigan sentiment, consumer sentiment for September coming out on the economic front this week. Okay, to start my video, I'll start with the index charts, and we got the ES chart right here up, and I'll show you what I'm seeing. Basically, this was a primary channel we were trading in on the uptrend. We broke down viciously the first leg, and now it looks like we are coming down into backtesting the second leg, in my opinion. This area right here has held. We might come down to that tomorrow. We'll see what happens. They could just take it sideways here. I don't think we're going to have a quick responsive move to the upside. I actually think we're going to be tagging this trend line for any potential bounce scenario going forward here. Ultimately, like I said, this consolidation down here, the 2020 open, that is my ultimate target to the downside sometime this week, and then maybe a buy the dip scenario at that point. Okay. Much more violent sell-off here in the NQs. We are coming down pretty significantly here. I would like to see that tag down here as well for support. As you can see, we've had support down here before. That would complete the pattern coming down to this price point this week, either tomorrow or Tuesday, coming down into this price range down here on the NQs. So that is my first support. Ultimately, I think this is your left shoulder, this is your head, and this down here is your right shoulder building out. So that gives you an idea below that trend line, possibly even by the end of the week, that we're going to be coming down here to the 10,600 area, in my opinion, for any type of support on the NQs. Okay, the Russell, what we're seeing right here as I've drawn my trading zones here, we came right into that trend line there as of Friday. So we potentially are crossing into a different trading zone starting the first of the week. And as you can see in my next series of charts, Russell is leading the way to the downside. So just keep that in mind going forward. Technically leading the way down. Let me show you. Okay, I'm using the ribbon study. And as you can see here, the dark orange is the fastest moving MA, and the heavy yellow, that is the slowest moving MA. And I just want to give you an idea. This is really good illustration of just how fast the rollover is coming down here on the IWM. And using the Andrews pitchfork, we came down here and tagged the pitchfork as of Friday. So definitely something to keep on watch here. Potential breaking down away from this primary uptrend we have been in since the 1st of April, and potentially breaking out of that uptrend since the 1st of April. So just definitely keep that one on watch. Really looking ugly. Okay, we know the violent move on the Qs, but look a comparative chart here. The Qs were violent, but as far as the primary trend goes, the IWM is much more leading to the downside versus the Qs, in my opinion. Like I said, ultimate goal way down here, the 256 area is the ultimate goal to come down here, left head, right shoulder on the IWM potential setup here. That's what I'm seeing happening here. Our SPY is holding in just a wee bit better here, in my opinion. We're back inside of this prior trading zone right here. We are back inside the breakout area. So that's why I think it's a little bit more weaker. The dotted white line, that's the 2020 open. That has been my target for the SPY. So that gives you an idea here. So we're looking almost a 10-point drop, over a 10-point drop on the S&Ps here. We are still inside of our Andrews pitchfork, but potentially setting up for a break of trend as well. Okay. And the most bullish of them all, that's our diamonds. That's the Dow Jones. And remember, they just got through rebalancing the Dow Jones. So naturally, it should be strongest of all the sectors because of the recent rebalancing and stuff. But just that's something definitely to keep on. This breakout pattern up here is potentially beginning to fail. It's the last one to possibly be breaking the breakout pattern here. Uh, is the diamonds, and like I said, it is the strongest of the batch. Okay, earnings are reporting this week, so I do want to point out on Lennar and home builders last week. They were showing the XHB. They were buying protection going into this week for the housing start numbers and possibly in the NARS numbers hitting the tape here. We are, in my opinion, in an overbought situation. Knowing the markets are relatively weak, we have achieved beyond the expected move on Lennar, so they have to have some outstanding numbers, which I don't think is going to happen because Lennar is one of the biggest home builders, and in this economy, I find that very difficult to be the biggest and outperform. It's a lot easier for the small home builders to uh, get things up and going and making really good returns versus somebody like Lennar trying to survive in this type of environment, especially where landlords aren't getting paid and forward contracts are probably being pushed way, way back, not with the unexpected nature of what's going on with this COVID stuff, and it's going to have a lot of devastating impact on the home builders and the real estate industry with what's going on with, and we haven't even remotely touched the surface of the impact that this is going to have. And if you look at KB Home, which also already reported, they did sell off on earnings, and it's really important to note that. If you go back here on a daily, they did report a lot earlier here, but that was back in June. They reported, and boom, and they came crashing down here. So I know that was maybe a little bit different time frame, but I did want to point that out. You know, there is a lot of risk here with Lennar going forward. Another one to be watching, and that is your Adobe. It is a pretty darn expensive stock on the price to earnings ratio. This is a primary channel. If you go back out in time, like on a 10-year, you can see what I'm talking about here. That was an initial channel from way back 2018, 2018 uptrend. We have managed to rocket ship all the way back up into that channel. Going into these earnings. Very toppy looking pattern, in my opinion. So definitely something to keep on watch. If you go into your shorter time frames, 1 second here. Yeah, one of my favorites to look at is your XHB. So we're going into this, with your short-term moving average coming down here. If I'd have been seeing a cross, I'd have been really, really concerned on the Adobe on the bearish side. But we don't quite have that bearish cross yet going into this week's numbers on Adobe. So definitely something to keep on watch here. The earnings have been, a mixed thing here. But look at how far we've gone here. We went from basically $400 and very little reaction on those earnings, and we're still trading up here $480 going into this earnings. So we're still another $80 higher on this quarter. So that is pretty darn significant going into these earnings, and we've even coming off considerably off the highs. So definitely keep that stuff in. I do think it's going to settle back inside of this channel with a 445 target for me. So that's another about $30 lower on Adobe. That just makes sense to me to settle into that on the earnings. Okay, I went out in time a little bit for FedEx. As you can see, it's had one impressive move off of the lows because of this COVID virus. and the highs were way back here at 274.66. But basically, what I did a comparative. You see this channel right here? I did a comparative move scenario, and as you can see, we're above that comparative move scenario with FedEx already. And then I compared it to UPS, which are similar companies, right? They had a blowout quarter, as you can see. Boom. And I did that comparative range, did the same thing. Basically, the charts look exactly the same here going into this earnings analysis to this week on FedEx. So I have to argue at this point, is good news already priced in for FedEx? So that is my biggest concern here going forward into this week is fully priced in the move for FedEx on these earnings. Because I do expect stellar earnings results, but are they going to be enough to push prices higher given the amazing move we've already had? We're not back at all-time highs by no means, but it's something to definitely consider going to forward this week. Okay, a quick rundown. Some of the most bullish action I'm seeing in the market. I'm going to start with SDS. This is one of the most bullish. You only got a 0.13 put to call ratio. Very bullish on the call side here. Look where it's located at. That is inverse. Ultra short the S&P 500. So bottom line is we're up here, and this is one of the most bullish reads going into next week. Is ultra short the S&P 500 going forward this week. In the same tone here, SPXU, S&P 500, another ETF doing the same thing. One of the most bullish reads going into this week, potentially breaking out scenario going into the first of the week. Bearish signal. Another one, SQQQ, that is our NASDAQ. Short the NASDAQ. One of the most bullish signals, not quite as bullish as the S&Ps, but very bullish indeed. Similar situation going into this week. I did want to point that out going into this week, how we are set up and how we are just on the edge of the cliff. Okay, that's exactly where we finished, on the edge of this cliff going into this weekend. Okay. A lot of people don't realize this. Okay, some other things I was looking at here. We do have retail sales coming out this week, as I pointed out. That happens Wednesday. They are loading up the put side on the XRT. I think it was like a 43 target. So down in this area, they are targeting puts for the XRT. They started last week. So I do want to point that out going forward here on your retail, and the retail numbers hit this week. Some of the things they're doing. Is there another one here? The ITB, I think that's what the XHB has also been hitting. ITB, yeah, Home Construction Index. We have all the home builder information plus Lennar reporting this week. This thing here was being active as of Friday. 1 second here, and I'll show you which strikes. I switched over to XHB. They were targeting the 46 puts there Thursday. Yeah, Thursday. So definitely, I wanted to keep that. The ITB wasn't giving me anything Friday. It was showing up on the scan, but it wasn't giving me a good signals on that. So basically, bearish setup for the home builders. They're taking on some insurance for a catastrophic move lower on those numbers, in my opinion. Some others that really stood out to me: Restoration Hardware, major, fairly significant short float going on here in your Restoration Hardware up here. This is a primary trend for XHB or RH, so they are buying put protection that is going to come back into the primary trading channel for Restoration Hardware over the next few weeks. So something that definitely, earnings are already out, hadn't had a blowout earnings season, so they're just betting on it to fade back in post earnings here on our Restoration Hardware. On the flip side, the I've been getting continued scans all week with the HYG, and this is the first time Friday that the HYG is actually improved to where it's not on my bearish scan anymore. So this is the bullish case going into next week, that they're trying to defend high yield bonds going forward into this week. Another area that continues to see downward pressure, that's your XBI. I don't think it's bottomed out yet either. I think it's going down here to the $100 level or lower. That's just a back test of the breakout. So I'm actually thinking you're going to be coming in on your XBI. Amgen is one of the biggest dollar holdings in that. And then you have, what was the name of that? You would have to ask me that. One of the COVID related names is one of the heaviest weightings in that index. But basically, Amgen is the biggest dollar weighting in the index, in my opinion. And then we have a really large short float in Tiffany here. It's been trying to hold these levels for some time now, but Tiffany is another one very bearish right now. We've got this great big area here going on with Tiffany. Could come down, crashing down pretty fast on Tiffany. We do have a hordes of China data this week, and if they're really want to get Trump out of office, in my opinion, they're going to make. They are masters at manipulating their data, and there's times in history where at times you want your data to look better than what it should, and other times it's okay to just have so-so data. Well, I think we're in one of those situations into the election that China is going to be conservative on their data reporting and possibly make things look worse than what they really actually are to help promote a weak economy into global economy into the election. So that is a scenario which I am floating out there for you guys to think about in your trading. One more takeaway from my put to call scan here. We're starting to see a lot more consumer staples like Mondelez and Altria, and there's several others here. So a lot more Tyson. I think Tyson's down here too. Yeah, Tyson's right there. But we're and Coca-Cola. You're getting more of your defensive names as this correction drags on, and that suggests to me, they're not wanting to short the staples. They're trying to move to safety going forward here with the way the markets are setting up here. So definitely something to keep and watch going forward here. Okay, that's the video is getting a bit longer. Like the video if you like it. Please leave comments, additional analysis or anything. If you see something, please leave comments at the bottom of my video so I can learn from you guys. If you like, you can always come in, join us with Trade with Joe in the trading room. It's like, I think he only charges $30 a month, for members. And so, it's a relatively cheap way to trade and learn from some really, really good traders. Okay. Thanks a lot. And I will see you guys in the trading room next week.